Next question. Using the information given below, complete the balance sheet of PQR Private Limited. So the question says that you are required to complete the balance sheet of a company. Current ratio is given 1.6. Is to 1 does not make a sense. Cash and bank balance is 15% of the total current assets. Debtors turnover ratio 12 times. Stock turnover ratio 16 times. Need not to provide that it is based on COGS. It is always like that. Creditors turnover ratio is 10 times. And this is important. It is provided that it is based on COGS. Otherwise, it is always calculated on purchase. GP ratio 20%. Capital gearing ratio 0.6. We understand that unless we have been provided some indirect information about preferential capital, we assume that the preferential capital is 0, and this information is useful to calculate the debt financing, long-term debt precisely. Depreciation is 15% of the WDV. Net fixed asset is 20% of the total assets. The balance sheet of the company as on 31st of March 22 is provided. Share capital 25 lakhs. Reserves and surplus you have to find. 12% long-term debt you have to find. Be careful that this 12% information sometimes becomes useful to us. Creditors we do not know. Provision for outstanding expenses we do not know. However, we know that the total of both of them is 68,50,000. On the asset side, opening WDV is not provided, depreciation is not provided, and closing WDV also not provided. Current assets is consisting of stock, debtors, cash bank. We do not know individual, neither we have the total. The total of the balance sheet is also not provided to us. Like that like we are required to consider this information for the purpose of making calculation of the balance sheet. I want all of you to go through the question and you just tell me whatever the things that you have been able to calculate. Whatever the calculations that you can calculate, just keep that in the chat box. So friends, over here we understand that the current ratio is 1.6. We have been provided with the information about the current liability is 68,50,000. So 68,50,000 into 1.6. So we got the current assets value in total. It is 1,09,60,000. Then we have been provided that the cash and bank balance is 15%. So into 15% that is the cash and bank. Correct. Write down answer along with me. Calculation of current assets. Current ratio is equal to current assets upon current liabilities. So current assets is equal to current ratio into current liabilities. Current ratio is 1.6 into current liability is 68,50,000. So the answer is 1,09,60,000. That is the way the current assets can be calculated. Next, calculation of cash and bank. It is 15% of the total, that is total current assets. So current assets into 15%. 1,09,60,000. into 15%. 16,44,000. Please write down this answer. So friends, over here we can see that say the net fixed asset is 20% of the total assets, like that information is given. So over here this value is given as 20% of the total. So we understand logically that say the current assets would be 80%. We have the value of the current assets, so we can compute the total assets. So write down next working note. Calculation of total assets. In that write down fixed asset is equal to total assets into 20%. So the total assets is equal to fixed asset divided by 20%. Total assets is equal to fixed asset plus current assets. Yeah, just a minute, friends. Fixed asset is equal to total assets into 20%. So current assets is equal to total assets into 80%. We have the current assets value. It is 1,09,60,000 is equal to total assets into 80%. So the total assets is 1,09,60,000 upon 80%. So that comes to 137 lakhs. That is the way the total assets is calculated. Once you have the total assets, then you can compute the fixed asset. Calculation of net fixed assets. It is equal to total assets into 20%. That is 137 lakhs into 20%. That is 27,40,000. And we can compute the opening fixed asset. Calculation of opening balance of fixed asset. We understand opening balance less depreciation will give the closing balance. So if this is 100, this is 15, and this would be 85. Because rate of depreciation is provided to us in the example as 15% depreciation rate. So over here 27,40,000 divided by 85%, that comes to 32,23,529, and depreciation would be 4,83,529. That is the depreciation. Everyone please write an answer along with me. In the fixed asset we have opening balance as 32 lakh, this is a fixed asset. In that, the opening balance that we have is 32 lakh 23,529. Then we have depreciation, 4,83,529. So closing WDVS 27,40,000. Okay. Now we understand that, say we have stock, we have debtors, we have cash and bank. Cash and bank we have computed as 16,44,000. Okay. On the liability side, we have share capital. The amount of the share capital that we have is 25 lakhs. Then we have the reserves and surplus that we do not know. 12% long-term loan, again that we do not know. Creditors we do not know. And provision for expenses, again that we do not know. Provision for outstanding expenses. Okay. Now, this is what's the balance sheet format. We understand that so the total we have of the assets and liabilities 137 lakhs. Total assets is 137 lakhs. And whatever is the total assets itself is the total liabilities. Okay. Now let us see that the information which is provided to us in the table. In that, the current ratio we have used. Cash and bank we have used. Now debtors turnover ratio. This information is yet to use. However, we do not have the debtors. We do not have the sales. So there are two things and only one ratio that we have. So debtors turnover ratio right now we cannot use. Stock turnover ratio need not to provide, it is based on the COGS. Again we do not have both the information. Creditors turnover ratio we do not have both the information. GP ratio is 20%. Capital gearing ratio is 0.6. Okay. So now over here we understand that we know that say what is the total liability, that is total liability is 137 lakhs. From that the current liability can be deducted. So the remaining amount is the capital employed that we have. And we have been provided with the capital gearing ratio. Everybody is requested to pay attention. We understand like this. Everybody is requested to pay attention. Working note for calculating capital employed. When I say capital employed, it means that it includes the debt financing. Total liability is equal to capital employed plus current liabilities. Fine. Total liability is 137 lakhs is equal to capital employed plus current liabilities, which is 68,50,000. So capital employed is 137 lakhs minus 68 lakh 50,000. So it comes to remaining 68 lakh 50,000. Listen carefully, all of you. Then we have been provided with the information that so the capital gearing ratio is 0.6. So we can say something like this. Capital gearing ratio. In that, say we have long-term debt upon, we can say that so the equity and reserves and surplus together, that is net worth. Okay. So we understand that so the long-term debt is equal to 0.6 into net worth. This is what so we have. Total of the liability side is equal to net worth plus long-term debt plus current liabilities. Now net worth can be replaced with 0.6 into net worth. Okay, long-term debt can be replaced this value as 0.6 into net worth. This is 137 lakhs minus current liability 68 lakh 50,000 is equal to net worth plus 0.6 net worth. Net worth plus 0.6 net worth is 1.6 net worth is equal to 68 lakh 50,000. So net worth is equal to 68 lakh 50,000 divided by 1.6. That comes to 42 lakh 81,250. Now you can make the calculation of long-term debt. It is 42 lakh, that is net worth into 0.6. So it is 42 lakh 81,250 into 0.6. So the answer comes to 25 lakh 68,750. And we can make the calculation of equity share capital. How we can make the computation? Net worth is equal to share capital plus reserves and surplus. So we understand that say we have to find the reserves and surplus. Reserves and surplus is equal to net worth minus share capital. What is the net worth? It is 42 lakh 81,250 minus 25 lakhs. So it comes to 4281,250 minus 25 lakhs. That is 17 lakh 81,250. That is the way the reserves and surplus can be calculated. So over here, this is 17 lakh 81,250 and long-term debt is 2,568,750. That is what we understand. Now friends, we understand that so that everything is now connected to only one point which is remaining, that is the sales and COGS. How to make that calculation, let us understand, because stock, debtors, creditors, these three things are connected with the sales and COGS. Everybody is requested to pay attention. Calculation of stock and debtors, stock, comma, debtors and creditors. Okay. Dear students, we understand like this. Everybody stop writing, let me explain you. Current current assets is equal to stock plus debtors plus cash and bank. This is the formula for the current assets. So we can say that stock plus debtors is equal to current assets minus cash and bank. Current assets value is 1 crore 9 lakh 60,000. Cash and bank is 16 lakh 44,000. So the remaining is stock plus debtors 93 lakh 16,000. We do not know stock value, we do not know the debtors value, but we know that the total of both of them is 93 lakh 16,000. Okay, no problem. We got this a kind of equation number 1. Okay, now sales, gross profit and COGS. Let us assume that the sales is equal to X. Then what would be the gross profit? 0.2x. What would be COGS? 0.8x. That is what's the proportion that we will have. Now, debtors turnover ratio. Is equal to sales upon debtors. Okay. So as far as the debtors is concerned, is equal to sales X, okay, divided by debtors turnover ratio. What is debtors turnover ratio in the question? It is 12. You can see that the debtors turnover ratio is given as 12. Now, we understand that the stock turnover ratio is equal to COGS upon stock. Stock is equal to COGS upon stock turnover ratio. Now suppose the sales is X, then COGS will be 0.8x. Upon what? Upon 16. Because stock turnover ratio is 16. Now the last equation. All of you must have understood, I think now. Let's say we know that stock plus debtors is equal to 93 lakh 16,000. Stock plus debtors is equal to 93 lakh 16,000. What is the value of the stock? It is 0.8x upon 16. 0.80x divided by 16. What is the debtors? Debtors is x upon 12. So x upon 12 is equal to 93 lakh 16,000. Now you'll get the answer 0.8 upon 16, 0.05x, and 1 upon 12, it is 0.83333333x is equal to 93 lakh 16,000. So the total of this two, 0.133333x is equal to 93 lakh 16,000. So x is equal to 93 lakh 16,000 divided by 0.133333. So the final answer comes to 6 crore 98 lakh 70,000. Okay. So now you have the sales value. Once you have the sales value, rest of the calculation will be very simple. Friends, we are doing again a question from May 19 examination question. So please write an answer. Rest of the working is very simple. Datus is equal to sales divided by 12. So 6 crore 98 lakh 70,000 upon 12. 698,70,000 divided by 12. 58 lakh 22,500. Stock. It is COGS upon 16. So 6 crore 97 lakhs 80,000. So 98 lakhs 70,000. Into 0.8 upon 16. $34 lakh 93,500. The calculation of creditors, it is again COGS upon 10. So it is 6 crore 98 lakh 70,000 into 0.10 upon 10. So 6,98,700. So stock value, that's it we have found. Friends, over here, sorry, there is a mistake in creditors. COGS is 80% of the sales. Sorry. 6 crore 98 lakh 70,000 into 0.8 divided by 10. So it is 55 lakh. I'm sorry. 55 lakh 89,600. Return creditors. Stock is 34 lakh 93,500. And the data's value is 58 lakh 22,500. Creditors is 55 lakh 89,600. And provision for expenses can be found as balancing figure 25 lakh plus 1781250 plus 2568750 plus 55 lakh 89,600 minus 1 crore 37 lakhs. So 12 lakh 60,400, or it can be computed as total current liabilities minus creditors balance.